In 2002, Malaysia initiated a program called MM2H. 20 years later, it ranked as one of the biggest investment migration programs in the world. What is it exactly, and why should you care? Hey, don't forget to subscribe to keep up with our real estate insights. MM2H was suspended by the government in 2020 due to the rise of COVID-19, but the program has been relaunched since August 11, 2021 with stricter requirements and higher benchmarks. But don't worry, all the information in this video will follow the latest updates from Malaysia's Minister of Home Affairs. Let's break it down. It's a 10-year visa program that allows foreign citizens to purchase property and to reside in Malaysia on a long-term basis. Note that MM2H does not entitle you to PR. MM2H was originally intended as a retirement program for foreigners over 50, but was rebranded in 2029 to attract high net worth investors instead. In 2021, 31% of participants were Chinese, while others came from Japan, the UK, Korea, etc. Approvals peaked in 2017 with more than 6,000 approved applicants. But with the 2021 relaunch, the program had become more exclusive. The raised criteria means that only 2% of current visa holders qualify for the program. 79% were not able to meet the new 40,000 ringgit monthly offshore income requirement. 91% would not be able to meet the fixed deposit requirement or will be unwilling to do so. So while there is still a lot of interest in this program, the eligibility has dropped significantly. But why is MM2H so attractive? As a foreigner, it enables you to 1. Invest in local real estate, companies, share markets, and so on. 2. Apply for long-term visas for spouses, parents, and children. 3. Co-invest in businesses as long as you are not the principal partner. 4. Enjoy tax exemption. Your foreign source income or pension is not subject to tax. 5. Apply for mortgages. Click on the card above to watch our breakdown of its investment potential. Now, might be a good time to start looking into the application process if you're interested in Malaysia. While 2020 saw average house prices drop due to the COVID-19, the country has recovered since 2021, showing a 26.1% year-on-year rise in the value of residential property transactions in the first quarter. In 2022, Malaysia expects to continue its positive growth and has opened its borders as a clear sign to overseas investors. By setting a higher bar, Malaysia has shown its desire to attract high-quality individuals to help boost its recovering economy. Since the release of online registration in November 2021, MM2H has received 111 applications, with 15 of them already approved in January this year. To meet the basic qualification of MM2H, you must 1. Be 35 years old or above. 2. Have liquid assets of 1.5 million ringgit. 3. Have a minimum monthly offshore income of 40,000 ringgit. Once the committee reviews the documents and approves the application, they will issue a letter of conditional approval. Then you have up to 6 months to complete the remaining conditions, including 1. A fixed deposit placement requirement of 1 million ringgit. After 1 year, participants can withdraw up to 500,000 ringgit, while the other half must be maintained as a minimum balance. 2. Medical report from any private hospital or registered clinic in Malaysia. 3. Medical insurance which is applicable in the country, although this requirement is waived for applicants who are 59 or above. Some agents and investors have called the changes to be too restricting, and while Malaysia is trying to rebuild its economy, they think the new requirement could end up driving foreigners out of the country, taking billions of ringgit with them, perhaps to the more attractive countries like Thailand and Vietnam. But at the end of the day, MM2H only contributed about 12 billion ringgit to the Malaysian economy, which is less than 1% of its cumulative GDP. The good news is that you don't need to be part of the program to invest in the country's housing. The Home Minister is still revising these new rules. And who knows, maybe the government might reconsider some of the changes. We suggest you take the time to do more research before jumping right in. Are you seeking to buy or rent properties in Malaysia? Which location would you choose to invest in? To learn more about the pros and cons of each region, as well as other property-related information, stay tuned by signing up to our newsletter and following our social media pages.